In order to grow and scale any real estate business, you have to learn how to solve for deal flow.
That's Henry Washington, author of the book Real Estate Dealmaker and an expert at finding real estate deals at a discount.
And that means you need to analyze every single one of those leads. What is the price that you would need to buy it at for it to hit your financial goals?
In this episode, you'll learn how to effectively network.
I'm going to get the most out of this networking event if I'm sitting front and center. It gives me a better opportunity to network with the people who are movers and shakers.
How to create a system for finding good deals on and off the market.
Like I was just using the notepad in my phone and I would just set a reminder to say, call this person on this date.
And how finding a great real estate deal is actually the foundation for great financing.
Less options for financing, the worse the deal is.
And now we're going to dig into all of that and more. I want to help people who are listening to this because I think this is such an important skill. You know, it's an important skill, but tell people, first of all, what does it mean? What do you mean by being a deal maker as opposed to just being a real estate investor? What's a deal maker mean?
Yeah, a deal maker is a persona you have to take on, right? Because in order to grow and scale any real estate business, you have to learn how to solve for deal flow, meaning you need leads coming in for potential deals. And then you need to be able to fund those deals, right? So you need some sort of money flow to go with that. And if you can solve those two problems, then you can grow and scale your business. The catch is that people find it very difficult to solve those two problems. And I think deal making is a skill because a lot of the times you're going to find your niche where you're going to go out and you're going to be able to market and find for deals, whether that's marketing that costs you money or time. But sometimes you got to be able to make deals, right? And so making deals is kind of the total package. It's when you have a lead and then you figure out what's the best way for me to be able to make this a deal through both acquisition and how you're funding it. And what we're trying to teach people or educate people on is you should be able to fund your deals with the type of financing that makes the most sense for that deal, right? And that makes the most sense for you financially. So you and I can get the same lead on a property and we may fund it differently because the finances that you have are different than the finances that I have. And when you piece together what the financial situation is with the funding that's best for the deal, you land on kind of what you need to in order to like make this deal a reality. So it's all the total package is about making a deal.
Yeah, love it. It's almost like a paradigm shift. And I want to get into some of the details of the money, where you talk about, it's like a puzzle. You got to get the money, you got to get the deal. Both of those are skills. How do you put those together? So we're going to get into some examples of that, but I want to talk about that paradigm shift because I think a lot of people understand, hey, you got to get into real estate, you got to have a good deal. But what I hear a lot is like, it's almost like the good deal falls down from the sky. It's in this package. And then you open up the package and it's a good deal. Look at this thing.
Right,
And
right.
maybe like half a percent of the time I've ever seen a deal fall out of the sky, but talk to me about like just the big picture benefit. And maybe you could tell a story because some of your early deals, I feel like were really good examples. Like if you can learn the skill that we're about to talk about, it makes everything easier. All your big picture goals, all the short-term goals. Why is it so helpful to be able to have this skill?
Yeah, man. It's I call it positioning, right? And so sometimes from the outside looking in, like you and me will see somebody take down a deal and it'll seem like, man, that deal fell out of the sky for them, landed in their lap and it was perfect, right? But what we don't see is how they position themselves to be able to take advantage of that opportunity when it came, or how they position themselves to actually like create that opportunity. So an example of that is my very first deal. My very first deal, to the outside looking in, seems like it probably fell in my lap. Somebody I knew called me and said, hey, I need you to buy my house, but I got to sell it in 30 days. I'll sell it to you at a discount, right? But what people don't see is before that person came to me, I was actively telling everybody that I knew that I am a real estate investor and I am looking to buy deals ASAP. Like anybody that would listen, I was telling these things to, because if you think about finding deals, it's cost you something. It's going to cost you time or it's going to cost you money. And so since I didn't have a lot of money, I wanted to leverage my time. And one of the strategies I was using was telling everybody that I was an investor, because the more people knew, if they knew of any opportunities, they would pass them my way. And yes, you're going to get past a lot of junk when you do that, but that's part of the business. I needed to weed through all that junk. And so because I was literally telling everybody I knew that I wanted to buy a property, somebody I knew actually needed to sell one, heard that and sent it to me. And so I positioned myself to find that deal.
I love talking numbers. So if I remember right, it was like you bought it for like 110, 115,000, right?
116 for, yep.
Okay. Pretty close. And it was $165,000 was like the value of the house. So, I mean, yeah, people look on the outside in, they're like, wow, you got lucky on your first deal, Henry. This thing fell out of the sky. Yet there's this step, and we're going to talk into some more steps here, but I want to talk about the step of, it seems so obvious to tell everybody what you're doing.
Yep.
Tell everybody, but can you give some practical examples, maybe how you did it at that point, but what are some other examples that if somebody's like just listening to this, they can say, I could go do this today for free to start deliberately telling people about what I do?
Yep. So you need to be actively networking, right? And so actively networking means you need to know where you're going to network, and you need to know what you're going to do or say when you get to the networking events, right? And so for me, that literally looked like when I first got started, I just started Googling all the real estate investor meetups I could find. The first one I went to, I just started asking everybody there, what are some of the other networks or meetups that I need to be going to, right? What am I missing out on? What are you guys going to? And so I started to compile this list of all these real estate investor meetups and when they met, and I was relentlessly, consistently going to them. And I think that's where people drop the ball, is they just go to an event here or there, and they go and they kind of sit in the back. Maybe they talk to a couple of people, and then nothing comes of it, right? No relationships or no deals or no anything. But you have to be persistent. And that's one of the steps we talk about in the book as well, is persistence. But you've got to be relentlessly consistent. So I would go to the networking events and I said, okay, how am I going to get the most out of this networking event? I'm going to get the most out of this networking event if I'm sitting front and center, because if I'm sitting front and center, the people that are doing deals or are comfortable in this environment are going to be sitting front and center. And so then that gives me a better opportunity to network with the people who are movers and shakers. And then
so I can't sit in the back.
Can't sit in the back.
Slap
and
out.
Be quiet. Right.
I got to get in the front. All right. I got it.
Got to get in the front. And then talk to people, right? And so I would say I would introduce myself as a real estate investor. I'd never done a deal, but I wanted people to know, like, I wanted the things that being a real estate investor have. And in order to have those things, you have to put yourself in that light, in that position. So I would introduce myself. When people say, well, who are you? What do you do? I'd say I'm a real estate investor looking to buy single family, small multifamily real estate across here in Northwest Arkansas. And then I also do X, Y, and Z for my day job, right? Most people, when they ask what you do, they say their day job, but that's not what I wanted people to get out of what I was wanting or what I needed. I wanted people to know, look, I'm an investor. I'm looking for deals. And so every meetup, consistently sit in the front, talk to the people that you're next to, and then start asking them questions. I would just ask them questions about their deals, because investors love talking about deals they've done.
Yes.
Right. And
they'll brag in a heartbeat. Right?
They'll tell you about it. Just say, well, what did your last deal look like? How much did you pay for it? Where was it located? What'd you do to it? Did you sell it? Did you rent it? Like, they'll tell you all about it. And you start to glean all this information about who the investor is, what good deals look like to them, how they're purchasing the deals, how they're funding the deals, right? All of this is information that you can use to improve or better your business. And so I just did that over and over again, every single meeting. And I started to build this network of investors, because what you'll learn is real estate investors are they want to help you. And when you're positioning yourself like this, you're around the movers and shakers, you're asking them questions. They see that you're actively trying to figure out ways to add value to them or help them. When they've realized that you haven't done a deal yet, or you're just getting started, they're like, well, how do we help you? Like, how do we want to help you get a deal? And so when that deal finally came to me, I had a whole network of people who wanted to help me take it down.
Yeah, the things that you can get, not only you got a deal, so that's one example, a friend, but you also talk about money. We're going to talk about different sources of money. You have money sources, but then just learning. Like if you could just learn, I mean, you got to learn along the way. You get contractor references. I mean, there's so many good things that come. Yeah. So what I'm hearing is just like if you had any other habit, if you want to work out and get fit, if you wanted to get good at a language, like you got to just show up. And it seems like the hard part about real estate investing, there's nobody with like a a curriculum in a university
Yeah.
saying you have to show up at this networking event every week. But if you want to be good at it, like you're saying, you want to be a deal maker, you have to show up consistently.
I look at it like if you look at athletes that perform at a high level, so college athletes, professional athletes, who do they hang out with? They hang out with other professional athletes, right? And they do that because A, you have a common interest, right? They speak your language, but B, you're gleaning resources from each other, right? And if you and I think this is such an easy way to try to get to success that people don't really take advantage of. Like if you just changed who the five people you hang out with the most to five people that are doing the thing that you want to be doing actively, you're going to learn so much, and you're going to be the next person that ends up having success in that arena because everybody around you is doing it, right? It's human nature. If you hang out around five people who are unfit, you won't be fit, right? You'll fall into those traps. If you hang around five people who are doing successful real estate deals, you're going to, it's like an easy button to help you figure out how to get things done. I'm not saying it magically happens, but if everybody around you is doing it, what you think is possible becomes a whole lot more easy to achieve.
Yeah, you're not having to push a motivational boulder up a hill.
Yeah.
It's like, all right, you're just kind of following with the right crowd, right?
Yeah. Yeah.
It's like middle school. My daughter is in middle school now, so I'm thinking about that all the time. And it's like, man, that who you hang out with in middle school, same
Yeah.
way. Like, hey, that's if you're a real estate investor, hang out with the people who are successful, who are doing the habits, who are doing the things you want to do, who are finding deals. Like, it's going to rub off on you for sure.
It's an easy thing to do to help you along your path to success. There are obvious tactical things that you need to be doing to get there, but the tactical things become a whole lot easier when you're seeing everybody around you doing them.
Yeah. So this is a foundation. We're going to be networking. You're going to be sitting front and center. You're going to be telling people what you're going to do. You're going to figure out different ways, whether it's verbally, emails, whatever. You're telling everybody what you do. That's step one. I love in the book how you break it down between deal finding and money. And then within deal finding, this is really helpful because a lot of people listening to this, we got people who are part-time, they're working a full-time job, they're buying like one house a year on the side. A lot of people like that, all the way to people who are doing this full-time. And so I want to talk about deal finding and how you have three different levels of being a deal maker. And it kind of, in my mind, it kind of matched the level of intensity almost of how intense you want to be about finding deals. So can you explain what those three levels are and why that's applicable to people who are at different stages of their real estate investing?
Yeah. So when you think about real estate deals, you think about, so your level one is you've got on market deals, right? So these are deals that are currently listed on the market, right? They are somebody saying, I want to sell a property, right? And you're saying, I would like to buy a property. So you go to the place where they are selling them and you can try to find on market deals. Now, this is a strategy that a lot of people want to use because it doesn't take money to find on market deals. It takes some time. And if you want to actually do it at a level of volume to help you reach some sort of financial freedom, then it takes a lot more time and some skills, processes, and effort in there. Because what you're essentially trying to do is it's all the same. If you need somebody to buy or you want somebody to sell a property at a discount, you need to find somebody who's motivated to do so and who has equity in the property. Right? That doesn't matter whether it's on or off market. So if you know that's what you need, then there are some things that you need to be doing to find those needles in the haystack through the on-market listings. Because most on-market listings are people who want to sell and maybe not need to sell. And so you've got to find the people who are listed who need to sell. And so there are absolute ways that you can do that with on-market deals through the keywords that you're looking through on the listings, through how long they've been listed on the market, through the number of offers that you make and the price point you make them at. So there is absolutely a way for you to find on-market deals if you have a system to do so. And so that's what we talk about in level one.
Yeah. So I want to dig into a couple of those, but I want to take a step back because maybe some people have heard us talking, deal making is so important. It's going to make you money. It's going to be really important. We didn't really define maybe what a good deal is.
Yeah.
And so, so you just mentioned, hey, somebody's got to be motivated. Somebody's got to have equity in the property. If they have those criteria, what is it for you as an investor, Henry? And I know we all have kind of little different criteria. What does it mean to have a good deal for you?
Yeah, for me, it typically means I'm gonna be buying at a 20 to 50% discount. And that range depends on where that property is located, right? So the better location, I can pay a little more, right? Location's not as good, I want to pay a little less. But I need to be buying at somewhere between a 20 and 50% discount in order for me to be able to monetize that property in a way that I feel is safe for my portfolio.
Got it. Yeah. So
Yeah.
it's not only the profits. If you
Yeah.
buy below value, you could turn around and flip it potentially.
Yeah.
You could rent it out, and then now you have some built-in equity. But I really like how you emphasize. So this is how my mind works too.
Yeah.
It's like safety. Like
Yes.
you're not going to survive this if the more margin of safety you have, like Warren Buffett
Yes.
talks about. The more margin of safety you have, the less you buy it for.
Yep.
Then you're just protecting yourself, because nobody's perfect. Like none of us really know how to analyze a deal perfectly. Things happen. So a good deal means typically buying it below value. There's a whole lot we could talk about, but that's a really good basic definition.
Yep.
So if we want to do that, we're talking about on market. A lot of people think like, oh, it's through real estate agents. They're all retail price. We can't do that. But you mentioned a few different ways. The fundamental you mentioned in the book is just setting up some kind of drip campaign with your real estate agent.
Yep.
So what kind of real estate? Could just any real estate agent?
Yeah, okay? Definitely not.
Is there a certain type that you would prefer to use?
Yeah, absolutely. I think you need to, when you're dealing with on market deals, you're hunting for the needle in the haystack. You're hunting for the seller who needs to sell and is willing to sell at a discount because they need to sell sooner than later. And so that means you're probably going to have to weed through a lot of potential deals. And the only way to truly know if somebody is willing to accept an offer at a lower price point is to make that offer, right? And so that means you're going to be making offers in volume, and you're going to be making a lot of offers at probably substantially less than what that person, that seller, is asking. And so what you're needing is a real estate agent who understands what you're doing and why you're having to do that. And the best agent to understand what you're doing and why that is a thing for you is an agent who is also an investor, because that agent will completely understand, okay, I know why you need to make offers in volume because you're looking for that needle in a haystack. And I understand that this isn't a personal thing that you are doing. You are looking for that deal, and that right person is going to be glad that you made them that offer. And it's going to take me having to be able to write up a lot of offers for you to do that. And so if you don't have an agent who's an investor, or what they call an investor friendly agent, then you're going to have to do a lot of educating of that retail agent to help them understand why. They may not understand why. They may think you're wasting their time. They may think that you're wasting the other seller's time. And that's not necessarily the case. And so having an agent who understands these things and wants to work with you because they see the what's in it for them for working with you as an agent, as an investor, is going to make that process a whole lot easier.
Absolutely. They almost have to see, take the red pill. Like in the
Matrix.
Yes, they got to see that there are good deals out here, and people will take less. And I've had so many situations where I made an offer to a listing agent, and they're like, the seller will never take this. And I'm like, I understand, but please make the offer. And they're always surprised with the deals I have gotten in that situation. They're like, I can't believe they did that. They're like, well, I know. Right. So investor friendly agent. So you're saying it's either an investor themselves, or at least somebody who's worked with a lot of investors,
or have a history of working with investors. Absolutely.
Got it. Okay. So they get it. And once you find that person, what does it look like? Just if somebody's setting that up for the first time, what does it look like? And what are maybe just one or two? I know you have a lot in the book, but what are one or two different ways we can filter out this big sea of listings out there to try to kind of tease out those needles in a haystack?
Yeah, absolutely. One of the easiest ways is to look at time on the market, right? So what we're doing is we're saying, okay, the longer a property has been listed, we're assuming the more willing that seller may be to sell at a discount, because if a property's been sitting there and it's continued to stay on the market and we know it hasn't sold, well, then that seller's either saying, hey, I don't really need to sell, so I'm not concerned with the time frame, or they're saying, man, I really hope someone makes me an offer sometime soon because it's been sitting here for a while, right? And so you can use time on the market as a kind of a filter for what could potentially be a deal. And so you can have your agent send you anything that fits your buy box. And what I mean by that is you obviously don't want every home that's been on the market for, 60 or 90 days or more, right? Because there's probably some multi-million-dollar mansions that are sitting there that long. But you need are the, what's your buy box? Are you buying singles, small multis? right? Bedroom, bathroom counts, right? Square footage count. You need to weed out, get your list of these are the types, this is the bucket of homes that I'm looking for. And then within that bucket, send me anything on an email drip campaign that's been listed for 60 days or more, 90 days or more, 120 days or more. You need to figure out what's the average days on market in your specific real estate market, and then use that as your baseline.
You start with your buy box. So you have some kind of filter that says this is the type of deal that's good for me, the type of property, the size, the location,
Yeah.
and then you set up this campaign. It's on a daily basis. Sounds like I'm going to review like what a deal maker's week looks like. You're going to networking events. You're doing that consistently.
Yep.
You have a real estate agent who's investor friendly, and they're setting up a campaign. And every day you're looking at your email inbox or your text, and you're saying a new lead, and so. What do you do so if you get 10 leads like that, Henry? What are you looking at when you get one of those in your inbox?
This is a great question, because this is where people fail with these methods. Like, if you're going to use a free method, it's going to take time. So you've got to put in the time. And that means you need to analyze every single one of those leads. You've already identified that they fit your criteria in terms of a property you would buy based on location, size, square footage, and all of those things. So we know it's one you probably like. Now you have to analyze every single one. And what most people do is they get that lead and they go, oh, this person wants, $300,000 for this house. There's no way I could pay $300,000. I'd probably have to pay somewhere closer to like $175,000. So I'm not going to make an offer, right? But what you need to do is dig into that property and actually do the full analysis to figure out what is the price that you would need to buy it at for it to hit your financial goals, right? If you're needing to buy it because you want it to be a rental property and cash flow, that's what you analyze it for. And if your analysis comes back and says, well, you got to pay $175,000 for this thing to be a deal for you, well, then that's the offer that you need to make. So you need to analyze every single one. Then you need to get back with your real estate agent and tell them the price point that you want to make that offer at, regardless of if it's $50,000 less than they're asking or $150,000 less than they're asking.
Do you have a story? I can hear people saying in their head, like, oh, this is going to be fun, and people are going to be yelling at me, and the realtors are going to hate me.
Yeah.
Can you give an example where you've had a deal like that seemed on the surface where nobody would take an offer, but you made a lower offer that ended up, you got the deal?
Yeah, man, absolutely. That's happened several times. So what you don't know is what's driving that person to need to sell that property, right? And then, like I said, the only way to do that is to make your offer. So we do this method right now, and so we will just reach out and we'll say, hey, our price point is going to be somewhere in this range. Would your seller consider it? And if they say no, or we're not interested in that, then we just go ahead and submit the offer. Because what they don't know is that as long as you submit an offer, that agent is required to present that offer to their seller. So we start by asking, and then we go ahead and make the offer. But there has been multiple times. I bought a house maybe about a year ago that the seller wanted somewhere close to 280,000, and we can only pay about 150,000. And so when we made our initial offer of 150,000, they told us no. And then 6 months goes by. And what happens is, as time goes by, reality starts to set in, right? The more time it sits, the more their situation may worsen, or the more they may need to get out of that property faster. And the more they may realize that, okay, maybe I'm overpriced and I can't get what I want, or maybe my situation's coming to an end and I got to sell this thing. So as the time went on, we got the call back and said, hey, is your offer still good at 150? Absolutely it is. And so we were able to buy that property at the price point that we were looking at, but it took a lot of time. And it took us having to continue to follow up. And I think that's where people drop the ball as well.
Yeah, let's talk about that. One of your 3 Ps in the book, I believe, is persistence, right? Mm-hmm. And also patience, yes. Being patient and persistent. Yeah. I found the exact same thing. Like I have one of my best properties is a triplex in downtown Clemson, premier location, surrounded by single family houses. People are like, how did you get that property? And I said, let me tell you, like I followed up for like 6 years, literally. I got at least 3 or 4 no's from the seller. I ended up, it's a sad story in a way, like I ended up buying it from his widow. Mm-hmm. He ended up passing away. She remembered meeting me one time when I went, they were at the beach, and I just stopped by and said hello to him and made an offer. And she asked the local attorney, there's this guy who's an investor who made us an offer. And so long story short, like 6 years of following up over and over again. That's an example of like some of the good deals I've had. I guess but there has to be a process, I guess. And you talk about in the book, a process for following up, because you might have like dozens and dozens of offers here at 125 or 175,000. Like, do you have a recommendation on how people can stay organized around that and actually do this follow up?
Yeah. So the easy answer, Jad, is to say that you need to invest in some sort of CRM where you're tracking your leads, right? And a CRM can be something that you pay a lot of money for, or a CRM can be just a Google sheet that you track everything in and keep up to
Yeah.
date, right? It doesn't have to cost a lot of money. It just needs to be a place that you're keeping all of your information in one place and keeping it up to date so that you know who you need to talk to and when you need to talk to them. So if you're making offers on the market and you're making 10 offers a week, and then you need to set a time for each one of those offers of when you're going to follow up. And so what we've started to do is just to put people in follow up buckets, right? So if they're not in the mindset that they're ready to sell yet, we may put them in a bucket where we're following up once a month. But if we're having a conversation and we think that they're just not quite there yet, but there's still some level of motivation, or we think that they're gonna they might get there sooner than later, then we may be following up every couple of weeks, right? So we would just
Right.
put them in buckets, right? Monthly follow up, biweekly follow up, maybe weekly or daily follow up if it's a hot lead and they're just not there yet. And so if you'll kind of learn as you're having the conversations who seems a little more motivated, who seems like they're just not ready yet, and you want to check on them in a little bit. But then you have to be able to then you have to actually do it. And so when I first got started, I wasn't even using Google Sheets. Like I was just using the notepad in my phone and the reminders app in my phone. And I would just set
Nice.
a reminder to say, call this person on this date with a little bit of information about the property. And so the reminder would go off, and then I would call them and do the follow up. So you don't have to be super sophisticated. You just have to have a process.
You got to have something. You got to be
Yes.
organized. If you just have a bunch of papers and or a bunch of emails, you're not
Yeah.
going to remember it. So the point is, be organized, have a system.
Yeah.
This is going to date me a little bit, Henry, but like I had a spreadsheet,
Yeah.
like every time I got a lead like that, I made an offer. I would just have at least a piece of paper. So this is
Mhm.
like paper based. I had like a literal physical like tickler file. They used to
Yeah.
call it in sales, like
Yeah.
where you had like a bunch of folders, and each folder was like for every month of the year, for every day of the next 2 months. And I would just put it like, okay, 15 days from now, I'll put it in the next one. Then every day my discipline was, all right, it's time to follow up. And I would
Yeah.
just pull out that day's folder. There'd be like 10 follow-up leads. And it's just
Yeah.
like, make the call, make the call, make the call.
That's
Man,
it.
but it's so easy now. Like you have like Asana,
Mhm.
Monday.com. There's a bunch of like these online, if you don't want to do a spreadsheet, take it a little bit
What,
level up. I mean, it's so easy to do with some of
what
these CRMs.
one pro tip that I don't even think is in the book is when you're having these conversations with people, the initial conversations, write down something, try to remember something personal about them, right?
Mm,
So, and then put that in your notes for your follow up so that when you call to follow up, you can talk to them about this personal thing and not make it just sound like, hey, I'm calling because I want you to sell me your house. But like if you know somebody, like you, if I had this conversation with you, right, you told me you had a daughter graduating, right? And so I may call you in a month to follow up and say, hey, how's things going for your daughter at her new school, right? Or how's things going for your daughter at whatever grade they're in now, right? Because
right.
you have that personal information, and it really helps to humanize you and it helps show people that you care enough about them to want to
Yep.
remember something personal about them and then check on them about it, and that builds a lot of trust.
Love that tip. Yeah, people like to hear their names, and they like to hear that you're their family, right? I
Right.
mean, their friends. That's we all like that.
Yeah.
So this is helpful. We kind of got in the weeds about on market, but this is really relevant to off market as well. And I want to talk briefly before we get into the financing about the difference between on market. I mentioned that there's these multiple levels you
Mm-hmm.
talk about in the book. There's on market, and then what are those other two levels?
Yep.
And then we could kind of talk higher level how that works.
Yep. So level 2 is other people's off market deals, right? So because really there's really two levels. There's on market and off market, but of off market, there's two subsections. So you've got other people's off market deals, and then level 3 is your own off market deals. And so other people's off market deals are where you're buying a deal that was an off market lead, but from an intermediary. And so that could be a real estate agent who has a pocket listing, or that could be a wholesaler who's went and found a great deal and put it under contract. And so now you're going to them to find these off market deals. And you're typically going to pay them some sort of fee or commission for finding that deal and bringing it to you.
And so I'm assuming when we talk about networking earlier, one of the other tasks of networking is to build this list of people, or these people who are going to be your main referral sources, whether it's wholesalers,
Yeah.
other real estate agents. I use commercial. A lot
Mhm.
of times I talk to commercial real estate agents because they have big deals, but they
Yeah.
also have these small deals that aren't really worth their time, and they send
Yeah.
them to me sometimes. Turnkey companies, title companies. Do you have any recommendations on like filtering out? You're out there networking, you're meeting people. Like,
Mhm.
how do you filter out the people who might be the best opportunities to get these other people's off market deals?
Yeah, that's tough when you're first getting started. And so it's just like anything else. You're going to cast a wide net and then you're going to start to narrow it down as you work with these people more, right? And so you need to find who are the agents who are sending off market deals to people, right? And so when you hear people say, "Hey, I bought a pocket listing from an agent," like find out who that agent was, right? If you hear, and then when you hear people say, "Well, I'm a wholesaler," well, go start to talk to that wholesaler. What you're going to do is you're going to meet a lot of people who probably don't have great deals or great lead flow to send you, but that's okay. You need to build that. You need to cast that net wide first, right? So find out who these agents are, find out who all the wholesalers are. You can go searching for wholesalers yourself. You can go searching for wholesalers at networking meetups, right? Get on their buyers list and say, "Hey, I'm a buyer. This is what I'm looking for. Send me anything that you have." And as you start to analyze these leads that you're sending you, because this is the tough part, right? Is the time that it takes. Once you start doing this, your inbox is going to blow up, and 95% of it is going to be trash, right?
Yep.
And you're going to get so bored and overwhelmed with looking at the same nonsensical, "This isn't a deal. This is you don't even have it under contract. Somebody else has it under contract, and you're trying to get a daisy chain wholesale fee off of," right? There's a bunch of garbage you're going to look through. But as you start to weed through that garbage, you're going to start to see some of the diamonds in the rough. Those are the relationships you need to go and foster more, because those are the better wholesalers, or the better agents who have the better pocket listings. And now your goal is to figure out, how do I get these people who have the good deals and who are doing this business the right way to think of me first and send me these leads before they're sending them out to this wide network.
Let's talk about that, because I
Yeah.
think in a lot of people's heads that I've talked to, they're like, "Well, what do I have to offer? I'm in California buying this property in Chattanooga, Tennessee,
Mm-hmm.
and this wholesaler who has so many people they could talk to. Like, what do they actually want? They have thousands of people on their buyers list.
Yep.
Why me? How can I be better than the other 1,000 people? Do you have any thoughts on that?
Absolutely. So you have to think about, what do these people want? You have to be able to talk to people in the what's in it for them, right? So you have to put their shoes on. So if you're a wholesaler, what do you want? As a wholesaler, you want to be able to work with someone who, A, has no problem paying a wholesaler and isn't going to hassle them over how much money they're making on every single deal. B, they want somebody who's going to be able to close, and close quick, without bothering the tenants over and over again for 100 little things. C, they're going to need a title company who's comfortable paying assignment fees, right? And so if you think of, those are the things that a wholesaler wants, how do I position myself to be somebody who can do those things? Okay, well, A, we know a wholesaler wants somebody who is going to close. And so if you have a history of doing deals, that's a positive thing, because you can be able to say to the wholesaler, "Hey, if you get any leads, send them to me. Look, this is the last deal I did. I closed on it in X amount of days. I paid all cash. I'm not going to go bother the seller 100 times." So uh, that's the second thing, right? Because a lot of these wholesalers, they go and they meet with these sellers and they say, "All right, well, we're going to contract your property for X amount of dollars." And then they get this contract. And then what happens is they go and try to sell that contract. And if they get a novice or a rookie investor who doesn't really know what to look for in a property, then they want to go out and look at it. Then they want to have their contractor come out and look at it. Then they want to have two or three contractors come out and look at it, because they don't want to buy something that could. And so have to think about, okay, now how can I streamline this process so that once I get a good lead from a wholesaler, that I only go out there once and try to get things done. So that means you need to get your ducks in a row on your side. Who's your contractors going to be? And how do you limit the amount of times you're going to go bother this tenant, right? Or this seller in their home. And so try to coordinate where you're only going to go out there one time. So if you're going to have a contractor with you, do it all at the same time, right? So that you can limit the amount of time. So that way, when you're having a conversation with a wholesaler, you can say, look, I have a history of closing deals and closing deals fast. I have a lender who has no problem paying wholesalers wholesale fees. I have a title company that has no problem paying wholesalers assignment fees that we can use. And I'm only going to go out there one time to take a look at the property. That's going to make you a whole lot more attractive than somebody who they don't know has those things lined up yet.
Yeah, what's so encouraging about this, Henry, is for me when I hear that, it's like these are things that you as the buyer can control.
Yes.
Like we could make excuses all day long about, oh, there's no deals out there and that they haven't fallen on my lap from the sky, right? But these are things like I can be a pre-qualified financed buyer who has cash money or a HELOC or a private money ready. Like I can do that. I can work at that every single week. I can be the kind of person who has a relationship with a property manager or contractor. I can build that relationship. Like these are things you can work on. You can make a to-do list. Like you could do this stuff and they will make you a deal maker. They'll make you, and it pays off. Like if you, what I'm hearing is like, if you put the work in on this stuff, then you might not get the first deal, you might not get the second deal, but like it's like a cause and effect thing. Like these are the muscles that a deal maker works, is these relationships, this ability to move quickly, this ability to have financing, and that's super encouraging.
Absolutely, because once you do that and then you get a deal closed quickly, you won't have to ask anymore. They're going to come to you as soon as they contract something new and say, hey, I got another one over on 123 Main Street. Right. And then you'll be able to start analyzing those. But you've got to build that muscle. You got to build that relationship so that and speaking to people in the what's in it for them is, I mean, that's how business gets done. That's what they want.
Yeah. Everybody's thinking of themselves. And if we can get them to where they want to go, we're going to win. So I want to talk a little bit about money. We talked in the beginning, this is a puzzle. You got to do a lot on deals. You got to find deals, but then the creation of the deal is often the money.
Yeah.
And I love the framework you had, because I think you put it out there nicely of every deal is often a combination of different types of financing.
Mm-hmm.
And so can you unpack that a little bit? Can you talk about loan combos, and maybe if you could think of an example, maybe that kind of demonstrates that'd be great.
Yeah, absolutely. So again, when you think about financing, we want to be fundamentally sound real estate investors. And that means we don't just need to know one or two ways to finance a deal, because I think that's what's happening a lot right now is people are learning one or two ways, right? They got their, creative finance hammer in one hand and they got their conventional loan hammer in the other hand. And then every deal they find, they're just trying to hammer that deal with one of those types of financing. And it may not make the most sense for that deal, right? You may need to use another type of financing, may be a better fit, right? Owner financing is great, but if you're owner financing a house that needs $100,000 renovation, the owner isn't going to give you that. Now you got to go find $100,000 that's not secured by any real estate. That could be a difficult thing to do if you're just starting out, right? So that owner financing may not be the best financing for that deal. And so what we want to be able to do is look at the deal and then look at our financial situation and figure out, okay, knowing what I know about this deal and knowing what I know about my current finances, this is the type of financing that I should use. And as an example of that is, so I recently bought a duplex. It was an agent who was selling it, but it was an off market. It was a pocket listing. He was saying, hey, we're going to sell this thing for $69,000. It was a very small duplex in a cash flow town. And I knew immediately, I'm like, man, that's a good price. That's a good neighborhood. Somebody's going to snap this thing up, right? And so typically, I would have bought that duplex with a construction loan, and it would have been on a 25-year amortization, and I would have put down 15%, and we would have just bought it that way. But that takes time. Their bank's going to want to get an appraisal, right? And so I'm like, I could do that, but it's going to take time. So what makes the most sense for this deal is for me to take this down with private money, because I know I have private money lined up that can close in 7 days. And because I could close in 7 days, that I was able to lock up that deal, because what was important to that seller was being able to get out of it. So I was able to say, okay, well, I can't give you 67, but I can give you 60. If we can close in 7 days, does that work? And they said, absolutely. And so I was able to take that deal down. And the financing that I used would have been completely different had I not had to hustle up on the time frame. So it's really a matter of understanding what are all of my options, and then understanding what that deal needs and what my current finances are. And then you can pick the financing that helps you get that deal.
Love it. Yeah. So you got to have a toolbox of different tools, different
Mm.
financing tools, private money.
Mhm.
We
Yep.
mentioned commercial bank loans, which
Yep.
I like as well. Hard money loans, lines of credit.
Yep.
You talk about a lot about what these are in the book and how to use
Yep.
them. Can you talk about the kind of dance between short-term financing,
Yeah.
long-term financing, and also for those, and this is something that I haven't talked a lot about, but early in my career, I used a lot of gap financing, or
Yeah.
like kind of, you called it bridge financing,
Yeah.
where sometimes you can get into deals without even putting any of your own money in
Yep.
if you buy a really good deal. So
Yep.
maybe can you talk about the relationship between those three different types of financing?
Yeah, part of making a deal is trying to make that financing, right? Again, looking at your financial situation. So if you're in a situation where maybe you're in a growth phase and you don't want to put a ton of capital down every time you're doing a deal, there's options for doing that where you can piece together multiple types of financing. And so what I would do, and what I still do sometimes, is I will use um, maybe a short-term loan to take a deal down, because that short-term loan may not need a ton of my own money to put down. So I might use hard money or private money to purchase a deal, right? Which is going to be a high interest rate loan, but may limit the amount of money that I need to put down. And so let's say I use hard money and I have to put down 10% to buy that deal. So I can go buy this property, put 10% down on a hard money loan. Because I'm buying such a good deal, I know that once I renovate that property and refinance that property, I can pay off that hard money loan. And so what'll happen is maybe I'll use hard money to buy it. They want a 10% down payment. And then I will use some sort of bridge or gap funding to cover that 10% down payment. So maybe I have that 10% down payment. Maybe I have it on a line of credit somewhere, right? Maybe on another property. And so I would get a hard money loan or a small bank loan. They need 10 or 15% down. And then I would go and get a loan from a line of credit, use that as my 10 to 15% down. And because I'm buying that property at such a discount, and the hard money loan or the small bank loan is going to include the money to renovate that property, I will buy it with the short term loan. I will renovate that property. And especially what's cool is if you're using a small bank to do this and not a hard money loan, you're only paying interest only payments during the construction period. So your holding costs are actually lower. And so I can use a bank for 85 to 90%. I can use a line of credit or some other funding source to cover the gap funding to cover the down payment. I can renovate that property while only paying interest only payments. And then once that renovation is done, I can refinance that property at a new higher amount at the new ARV. And I can pay off the short term loan and the line of credit. That way there's no more money in the deal, and now I have this property on a 30-year fixed that's fixed up and cash flowing. So it's kind of like mixing the Burr method with being creative on your loans that you're using to buy it.
Love it. Yeah, this is exactly many variations of what I did as well when I was growing. And I want to unpack a couple things to get your take on it too, Henry. Number one, I want to emphasize, like, to do, some people might hear this, and if they've been buying properties at retail price
Yeah,
and they've been putting 30% down,
yeah,
you hear the fact that somebody's borrowing the down payment, and you're like, what? Like that's super risky, first of all, to do
yeah,
that.
it is.
Number two, no bank's going to let you do that, because a conventional loan
Yeah,
would never let you have a second mortgage
yeah,
from a HELOC or from a bank or something else. So like, this is, you got to kind of get your mind outside of the traditional
yep,
financing world and say, we're buying good deals here. We're buying like properties at 50 cents on the dollar, 60 cents on the dollar, 70 cents on the dollar.
yep,
And that the deal, and going back to the comment earlier, is like the safety of the deal is the price you're buying at, the low
yes,
price. Like, so this whole thing works. Like, you can do these no money down deals if you're buying properties at really good prices, which goes back to the whole point of like why we spend so much time
yes,
on deal finding. So I love the dance between money and deals, money and deals.
yep,
You can do this. You can grow really quickly. You can grow safely still, even borrowing money from HELOCs, from the
yes,
seller, from private money. So if you have any other comments on that? Because I just
yeah.
wanted to make sure people get that.
Yeah, I think one of the first lines in the book is that the better you are at finding deals, the easier the money is going to be. That's why the deal finding part is the first section of the book, because it is your safety net. You cannot go out and buy retail price properties and these methods work. You have to be buying good deals at a discount. And so if you're doing that, there is absolutely a safety net, because if you're buying a good deal and at some point you want out, you can typically just sell that deal as it sits
Yeah.
for a price and be able to get out of that deal. So it is your absolute safety net. It is the foundation of financing. If you want to get good at financing, You got to be really good at finding good deals. And then you'll have
Yeah.
more options for financing. You have less options for financing, the worse the deal is.
Yeah, I used to have a little mantra I would tell myself as I was growing. I'm in that kind of risky part of your business.
Mm.
I always said, if I have a risky loan, a short-term loan, a hard money loan, a
Yeah.
private loan, I would always, I wouldn't want to borrow any more than I could go to my buddy Henry and say,
Mm.
Henry, I'm in trouble. Could you just buy this property for what I owe on it?
Yeah.
And if I never borrowed more than that, where I knew my investor friend Henry would buy it quickly, like 7 days from now,
Yeah.
I at least knew that I could get out from under all of
Mm.
these properties and just move on. Right? I might not make any money,
Right.
but like that was a mantra, and it served me pretty well because at 2008, 2009,
Yeah.
things got rough. We didn't have to sell any like at that point, but we did. We wholesaled a couple. We had to. So markets change. It's
Yeah.
unpredictable, but buying low with a margin of safety, going back to the Buffett principle, right?
Yeah.
This is basically Buffett's principle applied to real estate. That's what we're talking about here.
Absolutely. Absolutely. And the market it's more difficult right now. And I mean, we were just doing that. I've literally, but you can't see it, but behind this screen is a screen of all of my properties where I'm looking at what I've purchased them at versus where the equity position is in them now. And what that does is it gives you a level of comfort, because if I need to sell, is it ideal? No, it's not ideal. But if the market changes in a way where you need to offload some properties, well, if you bought them well, you've got that option, right? If you are upside down because you bought retail price deals and the market changes and you need out, you've really, really put yourself in a very difficult position to where you may have to file bankruptcy or something like that. So
Yeah.
I don't think I can't stress enough how important it is to get good at finding good deals, because that not only is how you make money in this business, but it's how you protect yourself.
Yeah, 100%. Well, a lot more we could say there. I want to circle back around. We've gotten very tactical, which I love.
Yeah.
Numbers, different deal finding sources. But one of the big takeaways that I think people will get from your book is the mindset that it takes to be a deal maker. And one in particular that I really resonated with was discomfort.
Yeah.
And you had this graph, like as you go farther on the x-axis, you get more and more discomfort, and then you make more money basically.
Yes.
The more uncomfortable you're going to get. So can you talk a little bit about that?
Yeah.
Because I think sometimes our impulse as a human being is fear, discomfort. We run away from that. Like,
Yeah.
I don't want to be uncomfortable, man. That's not cool.
Yeah.
But it's like the actual opposite. If you want to be a deal maker, you got to like lean into this stuff.
Yeah, man. One of the first things that we talk about is you're going to have to get comfortable with some level of uncomfortability. Now, the key is to be honest with yourself about how uncomfortable you're willing to get. Yes, you need to get comfortable with some level of uncomfortability, but we're not saying like go do the most uncomfortable thing and just do it until it works, because you're just lying to yourself. You won't do that if it's not in you, right? But yeah, the graph essentially, the graph relates to deal finding methods, but this can relate to almost anything in life or business, right? So what it's essentially saying is the more comfortable the deal finding strategy is, the less profitable that strategy is. And so like you look at something like just networking, just having a conversation with some people, like that's pretty comfortable to be able to do and use that to find deals. But it's not a super profitable strategy unless you start doing it just relentlessly, consistently, and giving it the time it takes to actually work. And that might cause you to get a little uncomfortable with, like I said, sitting in the front of the meetings and putting yourself out there. But that's a pretty comfortable strategy. And so not very profitable off the bat. But as you go up the ladder and you start looking at things like, cold calling and door knocking, like door knocking is super uncomfortable, right?
Yes.
You're just going and knocking on somebody's door, some random house, and saying, hey, I know you don't know me from Adam, but you want to sell me your house? Like, you're going to get the door slammed in your face and cursed out. I've heard people get guns pulled out on them. Like, it's uncomfortable.
I got a quick story on
Yeah.
door knocking. Which early in my career, my brother graduated from college. I was 2 or 3 years in the business. I was just hustling, buying, selling properties, and I was like, "Hey, Andrew, come work with me." And he's like, "Okay, you can live in my house for free." And so I gave him a list of like 15 or 20 pre foreclosures that had equity. I was like, "Hey, you got a door knock." I did 3 or 4 with him, and I said, "Now you're on your own. Like, you do this list, I'll do this list." He went about 6 months later. He's like, I'm out. I'm going to law school. He became a lawyer, and he's doing very well as a lawyer right now. But like, he's like, man, I don't want any of this door knocking stuff. Like, this stuff is crazy. You know, it's a whole other level of discomfort, and I'm uncomfortable too. Like, it's. But I was at the point. Just my personal story then is like the discomfort of me like not being able to pay my bills and having to like fail this thing. I had to imagine how uncomfortable that was to like offset the discomfort of me making hundreds of sales calls and doing all that. So this is a mind game, man. This is like something you got to, I'm not saying all of you need a door knock. That is a really, more advanced level sales kind of thing, but you get some great deals.
Yeah.
Like if you do that,
works.
It's going to work.
It works. We know it works and it works well. It's just uncomfortable, right? So it's a profitable strategy. It's just very uncomfortable. So the key is find the strategy that fits your personality and that fits your budget, because all of these things cost either time or money, and those are limited resources. So you know how much time and or money you can put into something. So where your resources meet your level of comfortability and uncomfortability, that's your kind of sweet spot. So for me, it was, I landed on direct mail, and that's how I still do most of my deals.
Yeah, love it. Yeah, so this is a personalized thing. You got to find it, but you do have to push outside your comfort zone. That's where the growth is. You're not gonna in the middle of your comfort zone. It's too comfortable. You got to get on that edge a little bit. I love it. So much more we could talk about, Henry, but I'm going to put a link to this book in my podcast description, the YouTube description. People need to check it out. It's an easy read, but it's super dense with lots of nuggets. I also want to give you a chance, Henry, to say anything else you want about the book, or also just where you can hang out. People want to see you. You're on the on the Market podcast on Bigger Pockets, but where else can people connect with you, and where would you like them to follow up?
Yeah, best place to connect with me is Instagram. I'm at the Henry Washington on Instagram. Yeah, I am my co-host on the Market podcast. That's a great show with a great group of people. And you can check out my website at seeyouattheclosingtable.com. So SEEYOU at theclosingtable.com, all spelled out.
Awesome. Well, thank you for your time, Henry. Good luck with everything. And we still got to let me rebound for you playing basketball at some point. Maybe down in Cancun at BPCon or something. We'll find a time to shoot some hoops.
I'm in for that, man.
All right. See you soon.
Take care.
In this interview, Henry shared different deal finding strategies for every personality and budget level. So for those of you who are on a limited budget and have a limited amount of money to invest in real estate, so in my next video, I'm going to share my favorite budget-friendly way to find deals, and it's called driving for dollars. I explain this technique in detail so that you can start finding the best deals in your market that no one else knows about. If you're watching on YouTube, you can click the thumbnail above me here, or you can click the link in the podcast or the YouTube description below. See you in the next video.